You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the wild world of volatility? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which all of you folks have been mainlining all week long. Hope your trading is going well in a very topsy-turvy, tumultuous week. A lot popping off out there this week, so a lot to get to here on the show. Remember, if you like what you hear of this show, anything else on the network, a like, a star, a comment, a rating, review, all that stuff in aggregate on whatever platform you're listening on. They are legion now, including Spotify, which we broke but then fixed. Now you can only get 3,000 episodes as opposed to 6,000, but I digress. Spotify can't handle the goodness that is the network, but I digress. If you listen on any platform, doesn't matter, like, a star, a comment, all that good stuff in aggregate does help new people continue to discover the content. And there are many new people out there all the time. Probably this week, another week where people are like, you know, this vol thing's kind of weird. I see it ticking up. Maybe I might want to learn a thing or two about that. So a like, a star, a comment does go a long way in this environment. And of course, if you want to go a long way into extra content, including, dare I say it, double pro Q&As coming at you this week. We went deep into vol this week. So if you like that stuff, you're listening to this show, I'm guessing you probably do. theoptionsinsider.com/pro is the place to go. It'll also get you options oddities right after this show, so your party doesn't have to end with vol views. You can come back for more, for extra party favors. And then, of course, all the other fun stuff, the giveaways, the goodies, the live streams, all that goodness. theoptionsinsider.com/pro is the place to go as we go around the horn, see who's joining us to wrap up our week here on Vol Views. Let's start out on the devastatingly destructive shores of Maine. Is that enough alliteration for you listeners? Where we are joined once again by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, how goes things on the hellscape that is the shores of Maine?
I don't want to break up the gloom and doom that you were trying to throw to the listeners, but it's actually probably the most beautiful day of the summer today.
So this is the one day of the year that it is nice on the otherwise
it is
hellacious.
The only and one day. Yes. It is breezy, 75, and the tide's coming in, and life looks quite grand, to be honest.
The rest of the year,
but I'm here.
Nightmare hellscape,
just because I love you.
Nightmare hellscape, 364 days a year, one day a year, mild and slightly sunny. So that's what you're paying for out there on the shores of Maine. as we keep on rolling a little bit closer to the studio here out in the hinterlands of Chicago, aka the suburbs, where we are joined once again by the once future and now present Dr. VSTOXX, also moonlighting as Dr. VIX out there. He is Mr. Russell Rhoads, now holding court, corrupting future generations at the Kelley School of Business. Mr. Rhoads, welcome back to the show. How goes your volatility summer, sir?
My volatility summer has been very just wonderful, and Andrew, I think we've got better weather in Chicago than you do there, which, usually it's either a furnace or it's freezing to death here. So, and I'm really shocked that your partner didn't let you go out and enjoy the weather today. It's like the 1 of 5 days a year that you could actually go outside where you live, and Mark threw you under the bus and said, you got to work.
Yeah, he did. Mark did throw me under the bus. He's like, "Oh, it's a beautiful day in Maine. Oh, you got to do the show."
Yeah, I know how his mind works. So.
That's a scary thing if you know how his mind works. That is a terrifying thing indeed. And then joining us this week, holding down the Eurex hot seat, a newcomer to the program and indeed to the network, he is Stefan Schlamp, the head of quantitative analytics over there at Deutsche Borse, joining us from across the pond. Stefan, welcome to the Volatility Views program.
Oh, thanks for the invite. I'm a bit intimidated, I have to say. But
Don't
I bet
be,
no
we're
physical
nice.
harm will come to me.
Don't be intimidated by the rock lobster. He's a very nice fellow at the end of the day. But Stefan, as we are wont to do with all of our first timers, why don't you go ahead and give our audience a bit of an overview of your background in the financial markets, as well as what the head of quantitative analytics does over there at Deutsche Börse.
Yeah, so I'm a rocket scientist by trade in the literal sense. Then spent a long time in academia. Didn't land a faculty position. Switched to finance just spring 2007, just when everything went pear-shaped. And I was lucky then at the time to not go into the CDO pricing vortex, but instead ended up in HFT Delta One, and then been then there since for 15 years, multiple firms, 5 countries, but aggressive, passive equities, futures, lit, dark in all its flavors, and now, since 2 years, I am with Deutsche Börse, right, selling shovels instead of digging for gold. And
I like that.
Yeah, so here, right, we try to help our participants, basically, and members to trade as efficiently as possible, right? Through our analytics, but then also through some proprietary data set that they can pump into their models and pricing engines.
So as a Delta One and an HFT guy, your frame of reference a little bit closer to home maybe than a lot of the things we talk about here on the show. But that said,
exactly.
That said,
I'm like two corners removed, right? Time, Delta One, and then the time scale wise.
But that said, everything in the vol world is getting dragged inexorably closer to expiration and shorter duration. One of the ongoing themes that is inescapable now in all the options world as well as in the vol world is all roads lead to 0 day now. I mean, we just pulled it up yesterday on our option block show. Big products like SPY and the Qs and even small caps to a degree, their entirety of their flow now is just dominated by contracts that are opened and closed on the exact same day. So that used to be a thing. People fled from expiration back in the day when I was on the trading floor, and now people are flocking to it en masse. So I'm curious for you, Stefan, as you've been watching this trend develop, and as pretty much the entire market is slowly starting to come your way, what are your thoughts on this ongoing evolution towards shorter duration trading, Stefan?
Before I say anything, right? Disclaimer, right? This is not the official position. Deutsche Börse, any of its subsidiaries. So just to cover my ass a little bit. So with a 0 day to expire, right, I mean, there's obviously been a trend, and I kind of wonder, right, how much of there's always been kind of a trend towards where's the retail flow, right, for the market makers, right? Where can I find where can I escape from the HFT and get some good flow, right? And I kind of wonder if that trend towards the 0 day to expiry isn't that. And I remember like in the mid tens, there was this craze about the Korean options, where there was a lot of retail speculation, and I wonder if this isn't part of the same picture. Personally, I don't have a view, right? If it's a good thing or a bad thing, plus probably if you have a German accent, you shouldn't trust ethical judgments. But yeah, it's a trend, right? But I think it's mostly people are eager to trade against retail, right, rather than HFTs and institutions.
That is certainly the case. All right, listeners, with the team assembled, we will dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's get to it. Time for the Volatility Review, the portion of the show we break down everything lighting up our tape today and indeed this week from a volatility, trading, and trending and analysis and unusual activity perspective. And a lot more vol to sink our teeth into this week than a week ago. The markets, after having just endless, nonstop green for the better part of this year, and certainly for the better part of the last few months, starting to get a little bit, I don't know if you can call them top heavy, but they certainly have been taking a respite for much of this week. Of course, a lot of macro things have been weighing on it as well. The geopolitical front as well. We had a lot of earnings popping off this week. We, of course, had the tragic events of last weekend, maybe weighing on people's minds how close we came to a very different scenario this week. The rumors of maybe something happening on the other side of the aisle with the other ticket this week. Big changes potentially afoot there, potentially not. All this kind of weighing into the heady stew that is the market today. And all that resulting in mostly and pretty much actually fully red on the screen. As we're coming into the start of the show, S&P off about 0.75%. And the NASDAQ off about 0.9%. The Dow off a little over 1%. And our old friend, the small caps, off about 0.5% right now. If you've been listening to this show or TWIFO or anything for the better part of the last 2 weeks, you also know that small caps and the Dow have kind of been the story of the last few weeks. They've been, I think, literally on fire is the term. So they're easing off a little bit this week. But what is not easing is vol. Man, we are looking a little bit frothy, a little bit juicy right now. After languishing around a 12 handle forever, and a lot of people wringing their hands. Oh, here we go. Here's the summer doldrums for volatility. Nothing's going to happen for the next few months until the election. Well, bam, 16.5. As we're kicking off the show in VIX land. That puts us up about 4.25. That was at the start of the show. I think VIX has continued to tick up even then. I think we're at about 1660 right now. So yeah, vol continuing to tick up 4.25 points this week. Did you have that on your crystal ball bingo card, listeners? We'll all find out at the end of the show how well we did. VVIX, after languishing in the mid to high 70s for quite some time, now roaring back to life this week. 97, up 17 points this week. So, yeah, I think it's fair to say vol is looking a little bit frothy. Stefan, as our guest, holding down the Eurex hot seat, we will start with you this week. So catch our listeners up. What is catching your eye out there this week from a broad markets perspective as you're watching all of this madness unfold this week, Stefan?
Sorry to take this a little bit on the detour. Yeah, but I always wonder, it would be a fun experiment to kind of, show group A of traders kind of the opposite prices, right? Instead of going up and down, and then ask each group to kind of have like an end of day summary, right? And I bet each group could come up with a good narrative, right, of why the market seemingly did what it did. Joke aside. So there's really, I'm on the tech, the super low latency side, right? And there things move, very slowly, right? And mostly because, the tech is complicated. People don't change their infrastructure on a daily basis, right? So nothing major happens, right, on a day-to-day or even week by week basis. And the players are the same. The kind of the microstructure is the same, and every day brings a billion new data points. And life is good.
I like what you said there about you can construct a million different narratives for what's going on out there in the markets. When I first walked on the trading floor, bright-eyed and bushy-tailed right out of college, I was possessed of this belief that everything had to have a story behind it. Oh, why is this stock up? And what's going on? Did an analyst recommend it? Why is the index up today? What's going on there? And all the old timers would just look at me and laugh and say, more buyers than sellers, kid, or more sellers than buyers. And I thought they were just cynical bastards who knew nothing about the market. And, a few years later, I've come to respect that point of view. At the end of the day, Stefan, more buyers than sellers, right? Or more sellers than buyers. That's really all you can point to, right?
Yeah, I kind of wonder, right? I'm kind of, very aware of my own limitations, right? So when, as a quant, you work among the traders, right? I think there are very orthogonal skill sets, right? And so they were all super smart, right? Not in the academic sense necessarily, but they had a very special skill set, right? Which I obviously don't have. So I'm careful to pass judgment, right, on people providing market color. So because it's there's a 50% chance I'm misjudging or that I'm wrong.
Always good to have a healthy skepticism for your own abilities and your own beliefs out there. Let's keep rolling around the horn. Let's go out to Mr. Rhoads, sir. Obviously, a very tumultuous week. A lot of things mixing into that vol stew earnings. As you mentioned, the geopolitical front. There's a massive hack attack or failure on the tech platforms. Airports are grounded. All things are being mixed into the heady market stew today. What's catching your eye today and indeed this week on the vol front, sir?
First, I do want to let everybody know that I was personally impacted by the computers going down. The hardest working liver from the 90s got scanned this morning. I had to wait about an extra hour to get there and get scanned because all the hospital systems were down. And Stefan, what you said about a different reason for a bunch of different traders. Back in my SIBO days, I would guest lecture at Northwestern at the journalism school where they covered, in the class for people that were thinking about covering business. And they were taught that the lead into every story about the markets needed to be the S&P 500 did this as traders started to focus on this, or as traders started to react to this, or as traders were in wait and see mode for something. So I guess right now, if we have a quiet day, it's wait and see what Biden's going to do this weekend. Whenever you have to have having a reason would drive me generally bonkers. And I agree with you. It's rare that there is a reason, and often the reasons that the market's moving off a lot are things that those of us that are close to the market kind of know, and then all of a sudden they become general knowledge, and everybody, you've got a herding type thing going on there. So my assumption with what's going on right now, we've had tech selling off a little bit. There might be concerns about a Trump presidency. There might be, and I'm going to be as apolitical as possible on this, and there might be concerns about a Kamala Harris presidency. Right now, you look at the odds, and I, with everything, I like to look at what the markets are pricing in. The odds are telling us we're going to get, Trump redo, and that might, that he's a volatile guy. He says volatile things, and maybe you want to be longer volatility. Maybe the VIX pit's gonna break out the "Make VIX Great Again" hat as a subtle support for that guy.
Be careful going down that road, sir, because you and I went down that road back in 2016. We all collectively said the one thing we could look forward to in a Trump president. He's a volatile guy. He's going to bring some vol back to the markets, and he proceeded to annihilate vol, one of the worst vol-mageddon to the downside I've ever seen. Took a lot of firms out of the business because there was no vol for the better part of a year. It was a terrible year. So no one wants a repeat of that. So yeah, the volatile Trump we can handle. The Trump who is the death of vol, we don't need. By the way, speaking of hacks, Mr. Rhoads, I think that hack is still hitting your systems because your volume is like up and then it's kind of modulating weirdly. So someone might be hacking you right now at the moment. So just bear that in mind. Yes. We could hear 2/3 of what you're saying out there. The other third, kind of a struggle, but we'll struggle through. because you got some nuggets buried in there. All right, now out once again to the hellacious landscape that is the shores of Maine. He has ripped himself away from his day-to-day struggle for survival just to talk vol with us. Mr. Rock Lobster, what you got for us?
Well, I believe the line that we bandied about for quite a while was there ain't no way that Donald Trump is a single-digit VIX president.
And he was exactly
Something
that.
along those lines.
He was exactly that for the better part of a year.
And
it was ridiculous.
He was that for a year. And then I believe he threw the tariff thing on the Chinese. We had Volmageddon, and everything has been very exciting since then. Although it's gotten a little boring here. I guess the market just going straight up under Biden here under 2024 has been a little bit like that. But we have not got the single-digit vol quite yet. Anyway, we had that COVID thing, the 20 trillion in spending in between now and then, and a few things are slightly different. But as far as we are at I didn't even believe I'm saying this right now. We're at we haven't had a VIX print this high since April 22nd. So what is that? 3 months ago? June, May. Yeah, 3 months ago. We're at a 3-month high in volatility. SPX is actually below 5,500. It was 5,700 which is only 4% away, by the way, or less than that, a couple days ago. So you're looking at this, and so when I look at trading vol, I've got my own very odd, old school, just stuff that you learn when you're a floor trader. It's hard to undo. And like I used to think of vol events when the market would sort of pick up. We didn't really have VIX back then, predating the once and current Dr. VIX. Because there was no VIX to be Dr. VIX of back then.
Nope.
We were just a twinkle in his eye back then. But, vol events, you generally had unless it was something that was like earth shattering, the market pretty much takes the news in stride because, there's volatility. It's pricing, we're already kind of pricing the fact that things are going to move. But then there's this nasty surprise that comes out of nowhere, or some strange thing, and there's a vol event one, and then there's another, and then there's another. So usually, and then since in what I would call the VIX era of trading, since 2000, whatever, 3, 4, whenever, Russell will know, obviously, when they launched the VIX. But now I view it as what gets VIX over 20. So usually you need 3 adverse news events, enough that kind of sends S&P 500 down. So like the first one, thank you, Russell. I love having you on this show. Futures 04, what cash was 6.
Yeah.
So right now we've had basically, the earnings, we're at all-time highs. Tech is at a crazy valuation. Q hit 500, up 100% in 2 years since October 2022. Like, tech has done everything you could ask. So now you have to have such perfect earnings to keep those valuations up there. And, in this week, TSM, okay, but not perfect. ASML, okay, not perfect. Netflix, on any other day, they would be good earnings, but not after the stock's already up 100% in a year. So you're getting a little pullback. So everybody's like, they're a little worried about that. Then you throw in this, like it was a lock at the beginning of the Monday. Trump was going to face Biden. And again, it's the politics bleeding into the market. And that, like, he's staying in. And then markets seem to like that. And then all of a sudden, polling well, not well, whatever, was a tone change on the Democratic Party side. That, again, adds uncertainty to the market. That's a net negative. And then CrowdStrike comes in and, blows everybody out of the water. Oh, we had to stop whatever the problem was. again, another news item. Now, I would call these relatively light news items, meaning, Joe could be replaced by somebody else. They can fix the CrowdStrike issue, since seeing as how it was a software, it appears to be a software upgrade malfunction. And the earnings are still good, but not great. Now, is that enough to get VIX to 20, right? So I would call these three light news items. But it is enough to get VIX up to 17. And the market is really it's selling off, but not a lot. It's barely getting a 1% a day. But it's still selling off. Now, one thing about volatility is anybody that's traded professionally for more than 3 days would say the market going down is not a problem. You could trade the direction. It's the whipsaw that kills you, right? Because especially if you sell out of juice and all of a sudden you're getting run over because all the calls and stuff you sold, you're just getting smoked out. So a lot of volatility gets built into the upside as we go down. And conversely, it gets built into the downside when we go up, which is what the skew just kind of accounts for anyway. And right now, I think that's kind of part of the issue. We still have a slew of major earnings to come. So while these items are slightly negative on balance, I would say they haven't been catastrophically negative. And that's why we're only down a couple percent from the top. But it's enough though, right? Because if you're looking at it from a point of view as we could snap back in 3 seconds, how do you price back going to 5,700 SPX in 2 days? That's 195 points. So you're not going to price that upside vol at a 9% or an 8%. There's no way you're going to do that. You're going to price 12, 13, whatever you can get on the upside because you're probably not seeing a lot of upside call sellers right now. So I think part of the factor is, as so much of 2024 has been, you get that little tiny downtick. Everybody's like, oh, this is the big one, channeling Fred Sanford from Sanford and Son, the big one, Elizabeth, it's going to be all over. And then we rip right back up again. So I think part of this vol is, okay, we're going down a little bit. Any of us would say this is not really a sell-off. Stocks are going down, but it's not like everybody's hitting the exits. But I think folks, traders especially, are looking I'm a market maker. I'm looking for getting as much as I can for the upside when the inevitable face-ripping rally happens again. And that is my opinion on the current vol action.
Speaking of the current vol action, our chat is all abuzz with all the rumor stuff going on. So I was going to save it for the end of the show. Maybe we'll just get it in now at the top of the show and get everyone's thoughts. Obviously, it's a political morass. We don't want to go down that road out there, but there are very credible rumors out there from legitimate sources now that Biden might indeed step down over the weekend when obviously the markets are closed. A lot of people are speculating in our chat. What does that mean? Will we open up higher in vol on Monday? Will we open up lower? There's a couple of scenarios and ways it could play out, right? He could obviously not step down, in which case, nothing really happens. Maybe any vol premium comes in a little bit. But also we have a scenario, maybe two scenarios we're really hearing. One is he steps down and obviously endorses his VP, which is, I think, the expected route most people would expect. But then also we're hearing credible reports that he may step down and endorse no one, in which case the upcoming Democratic convention here right down the street from the studio here in about a month, it's going to be a banger. First real open convention we've had in this country in, God, I don't know how long, maybe back since the Civil War days. But yeah, it should be interesting. So a lot of different scenarios. I just want to go around the horn really quickly because, again, everyone's asking. I'm sure people listening at home are thinking this right now. So let's workshop a couple of scenarios. Biden steps down and he endorses his VP, and Biden steps down and he doesn't endorse his VP. It's kind of a bit of a free-for-all. What do you guys think happens on the open for vol? Russell, maybe we'll start with you.
Sure. If he endorses Kamala, I think volatility comes down. If he decides to say, I'm not going to run and I'm going to let the delegates decide who's going to run, that is going to be we'll see a curly number in front of the VIX to start VIX on that case. So I do think it depends on the nature of his exit. If he doesn't exit and just continues to stick around, I think we're just going to hover here in the upper teens.
Yeah, kind of treading water. Mr. Rock Lobster, same question for you, sir. How do you think we play out from a vol perspective in those scenarios?
Yeah, I mean, if he says I'm done and I endorse Kamala, I would say that would be a vol. That would definitely be a vol dropping to some degree, maybe 1 or 2 points. If it's more a bit of a mess, then we could see, I would just say we're going to have kind of a choppy orbital market with kind of a higher vol for the midterm until, because you haven't seen many other candidates been put up since they all try to rally around Biden, according to just looking at news. So, but I think, yeah, if he goes around there, I agree with Russell. You should see a lower vol. But if it's kind of like I'm angry that I got booted and I'm gonna just create a mess, you get a little vol. But I think this is really this is 18 to 20 vol. It's not the danger zone type volatility. Because eventually, the Democrats will have a candidate eventually, and he will go against Trump, and there will be a vote. So these are all things we're assuming, of course, but I expect them all to happen.
Stefan, we don't normally talk politics on this show. You caught us at an interesting week. I know also you're not here in the U.S., so this stuff is kind of outside your frame of reference. But if you have any thoughts on this, by all means, have at it. Obviously, an unusual situation for the U.S. president to effectively announce he's not running again, let alone perhaps not even endorse his running mate. So I'm curious if you have any thoughts on that, Stefan.
Well, I'm thinking of that scene in Pulp Fiction, where the two hitmen with a guy in the back are driving and asking, what do you think? I don't even have an opinion on this. But just before his head gets blown off. So
I was going to say, I hope you don't get shot in the face as a result of this conversation.
But I hope that just for a change, there's some volatility on good news, right? I think why does it always have to be Lehman going under, Fukushima, Ukraine, COVID? I want more volatility on good news.
Let's get out to something Stefan pays a little bit more attention to. That is, of course, the Delta One world. Let's get out to the realm of the future, shall we? In particular, VIX futures, surprise, surprise, a little bit juicier, a little bit frothier this week than they were last week. By the way, we already hit a 17 handle now in VIX Cash, listeners. So we are continuing to climb up this proverbial wall of worry here on the vol front as the show continues. So intriguing stuff. We got some literal weekend risk facing us this week, which is always interesting out there. Of course, coming into the start of the show when we ran these numbers, obviously the front end of that curve looking a little frothier. The AUG future was up about exactly 2 points, hanging out at about a 15.85, and July obviously off the board now. So intriguing stuff out there. And we had September up about almost 1.5 points, about 1.45 points out there. So the front of that curve getting a little bit frothier, a little bit juicier out there. We've been saying for a while, too, we've been below that 20 handle. That is still the case right now. If you look all the way out to March of next year, still below a 20 handle. The highest we get is 1880. But that said, that is about half a point above where March was this time last week. So we're starting to get within spitting distance of that 20 handle. Again, we got some paper going on today that we're already asking you folks about that is leaning towards maybe the return of a 20 handle. So a lot of things going off. Stefan, I know you're a Delta One guy, so you spend a lot of your time watching the futures market. I'm curious what part, if any, the vol futures play in there, and what are your thoughts on the term structure we're seeing out there in VIX land right now, sir?
I think the FBS, that's the Eurex volatility future. It's kind of interesting because it has a comparatively really thick tick size, and so it has an interesting market structure. I was actually surprised how thick the book is and how much liquidity there is near the touch. And actually, I kind of, if I may, I'm kind of interesting, right? When I hear all these these volatility trades, kind of, if I may ask a question, right? So how are you guys? And with you guys, I mean, the volatility traders and your audience. So how do you typically put on a trade? Just cross the spread, or is there some you try to fill passively, and kind of on the actual execution side, right? And what there are kind of the bottlenecks, right? Kind of how what fraction of the expectancy are fees or the spread cross, right? So how do you look at this angle? Once you made up your mind, then in the actual execution, or is this does this not play a role?
Spoken like a true market analytics man out there, looking at the execution side. Unfortunately, a lot of the products we talk about here on the show are, shall we say, not the most liquid when we get into some of the vol ETPs like the SVIXs and even the UVIXs of the world. Those, you're kind of left wanting a little bit. If you want to do more than hit bids and lift offers, you can try to work things. It's kind of 50-50 whether you get filled in mid-market. Things like VIX, though, you got a little bit more room to play, obviously. VIX, obviously, a lot more liquid, especially if you're playing near front month, near around at the money, slightly out of the money. You could usually get some stuff done mid-market. I know for me, it's not really that much of an issue. I don't know, Rock Lobster, that's a good question. On the execution front, for you, how much of a... we talk about not trading SVIX options a lot as a result because it's just so illiquid. Changing a little bit today. We'll get to that in a little bit. Spoiler alert. But I'm curious, Stefan's question here, Rock Lobster. What are your thoughts on the execution side? How much does that play into your vol trading? And then B, what's catching your eye on the vol surfacer?
I'm just bemoaning the facts that VIX tick below 17 right now.
I killed it when I said that.
Get really excited.
I killed it.
And because my students and I, so we made a little money with some SPY put spreads and the VIX, whatever. But it's been like freaking ice cream money, ice cream money. I want some freaking Dom Perignon money. But anyway, so what I would say there is for students, there's always like a hard and easy side of the market. So when I was young and I was teaching floor traders how to trade, I was a floor trader. They come in the pit. So one of the exercises I gave a floor trader was, your job is to tell me the easy execution side of the market based on the paper and what's going on. This is when there's actually somewhat skill involved in all this. And so that skill does not go away after doing it for 15 or 16 years. So there's always an easy side to execute any trade in the market, because the markets you see by the market makers they're there. The markets are there, but sometimes they're what I call jello markets. So you could stick your finger through the market and there's nothing there. So, and Mark probably well remembers this. You make a market and you're like, quarter half, 10 up, but your real market was like a quarter bid for one and at a half for 1,000, right? So, and that still happens now, although the electronic marketplace, obviously 20 years later, it's so much more sophisticated because they can adjust quicker, but it's still similar, right? Where they're going to be on a two-sided market, but that market will be highly liquid in one way and not so liquid in another way. So one of the skills we teach students at Option Pit is you've got to learn what the easy side of the market is, understanding vol, understanding direction, having some idea of the product you trade, open interest. So, or when you're executing a spread, how easy is executing a spread versus, let's say, one option? So we're kind of weird because we go into ridiculous detail on how to trade, trying to teach people how to trade options. So that's all stuff you can learn. So there's always an easy way based on vol, order flow, and things like that. And once you kind of figure out what those things are, life is a lot easier. So just the easy example is, okay, the market's ripping. How easy is it to buy a call? And I'm just going to tell you, it's impossible, right? The market's ripping. There's no way you're going to be able to buy a call unless you're lifting the offer, maybe a penny, a nickel through the offer to get filled, because the liquidity providers are not stupid and they know, okay, the market's ripping, so we're just going to set up our systems. Unless you're lifting the offer and you hit it at just the right moment, you're not going to get filled. And that's just something you have to kind of, start to understand. It's like trying to get short when the market's falling apart. This is what I would call a controlled sell-off, so it's not too hard. But if volatility jumps and it's really hard to buy puts, it'll be easier to buy a put spread than a naked put. So you just, you learn stuff like this as time goes on. So anyway, so there is a way. It's just trying to do the hard side is always difficult. The second part is term structure wise, we're flattening up. What I would say, let's see if we finally, because my favorite indicator is the 9-day VIX. It's 9-day VIX versus VIX, and it's still not over cash VIX. So what I would say there is some volatility looking at 9 days versus volatility looking at 30 days. That little bit of backwardation and noise in the front end of the curve is like traders are telling you. So there's still not what I would call wild interest in the front end and the short-term options. Normally, when we start selling off, you see like the 9-day, like 0.5 point, 1 point starts really ripping over VIX, and it's still at a discount. So, maybe VIX is now starting to cover. People are starting to get wise to the fact that the convention's out there. What is it, in August sometime? There could be a little bit of volatility. And like we were joking, we don't like to talk politics, but there is a VIX bulge in the VIX curve that looks quite amazing between the OCC and November contract. Why is it there? The election. So even though you don't always want to jump into politics with markets, sometimes the politics do jump into the markets and they show themselves in in the volatility surface. So it is possible that VIX is picking up the Democratic convention. So the big question is the convention over after August expiration? So let me see here. Democratic convention. And that is August 19th to the 22nd. So the crazy thing is it's right in the middle of August. So that could be actually a problem for the August cycle, trying to get back to lower vols, because if you have an open convention and it's kind of a free for all, you might not see lower August volatility. It's possible. So just keep that in mind, when you start looking at all those juicy cheap puts in VIX, that the convention is the 19th to the 22nd. VIX expires on the 21st. So you could have some excitement around that VIX expiration. And that, of course, will make the curve do goofy things around then. So anyway, I would say just be mindful of those things.
And as always, a whole bunch of excitement around the International Volatility Review. So let's get to it.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of VSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX.
All right, listeners, welcome to the International Vol Review, the portion of the show where we do just that. We break down everything going on beyond our shores, across the pond from a Eurozone perspective, and looking a little bit frothier out there as well. Go figure. VSTOXX closing at a 1652. So quite a bit higher, almost 3.5 points higher than it was this time last week. We were at a 1306 on the show last week. Mr. Rhoads, obviously, I turn to you as our once future and present Dr. VSTOXX. Anything catch? Oh, before we get there really quickly, I know if you have some thoughts on the VIX term structure, or I believe you had a synthetic future you were looking at out there as well. Regale us with that really quickly. Then B, what's catching your eye in the world of all things VSTOXX?
Well, I'll go quick on the first topic. I got an email from somebody asking me how I define backwardation in contango years ago. In fact, I had not updated the thing since 2021, but I have a way of coming up with a standard 30-day VIX futures contract, weighting the front 2-month futures, and I'm gonna explain it and put it in my Substack this weekend. I'm trying to do something beyond just reviewing what happened the previous week when I write up my weekend Substack. Usually what I end up writing up is something that came out of this program. So there's that for that. Needless to say, we're in backwardation right now. If you, because both the front month futures are, I think, below where spot is right now. And VSTOXX, VSTOXX has started to come down because they got their election goofiness behind themselves. And I'm trying to pull up the curve here as well. My whole freaking tech's hating me today, guys. So VSTOXX is back down to, it's around 1650 or so. It had been lower this past week. It's moved back up in line with us, but the premium that VSTOXX had to VIX was pretty hefty for about 3 or 4 weeks there. Now they're both back in line with each other. We noticed this last week, and it still holds up. Andrew just mentioned the VIX term structure where October, I think, is at about a 60-cent premium relative to November. It's gotten down to about 35 to 40 cents, and now it's widened back out, I guess, with all the goofiness that's going on. If you think that volatility is going to settle down between now and the election, trade VSTOXX. The October VSTOXX future is at a $1.10 premium to November. And it's been wider. They've swapped spots a couple of times, but for about 3 weeks now, it's been wider. So if you do think that everything's got to be settled about 3 weeks before the election, I can't think of a better way to play it right now than to short the October future and buy the September future. The November future. The November future. Just did that backwards. So intriguing. Short the October future and buy the November future.
Any interesting trades come across your radar? Bullish risk reversals, sell and put, buy and call. We saw some of those well-timed in the past. Russell going a little bit alien on us there, listeners. We'll get him back. I think the crowd strike. I believe he said someone was selling the 13 puts in VSTOXX, but we will get clarification from him in a second once we get him. Once this hack, they're just coming for the once, future, and present Dr. VSTOXX out there. He is clearly in the crosshairs out there. Let's see if VIX options are in the crosshairs this week, shall we? And the answer is kinda. It's been a pretty dense week, as you might imagine. A little bit of red on the screen goes a long way towards driving some VIX volume, especially as Rock Lobster indicated a little bit of whipsaw action, and we did have some of that this week as well. Today looking pretty robust as well. 717,000 contracts on the tape today. Looking pretty robust. The ADV getting back up there, 794,000. That's up 83,000 from this time last week. In terms of our top 10 out here, if you're looking for a little bit of put action, you might not think this is the week for you, but surprise, surprise, 2 puts sneaking into our top 10 this week. That's double what we've had for pretty much most of this year. Number 10 is one of them, 215,000 of the AUG 15 puts. Number 9, 221,000 of the AUG 47 halves, so right back at it for number 9. Number 8, 221,000 of the DEES 42 halves. Number 7, 238,000 of the AUG 17s. Number 6, 250,000, so pretty much exactly 250,000 of the SEP 15 puts. So 15 puts where the action is, listeners. Number 5, 268,000 of the AUG 25s. Number 4, 332,000 of the SEP 20s, 2 O's. Number 3, 351,000 of the SEP 45s. Numero 2, 373 of the SEP 17s. 17 strike, probably one of the more reasonable, unless you like the 15 puts on this list. And the big dog out here again this week, 403,000 of the SEP 25s on the docket, listeners. In terms of tape, yeah, we are seeing some action out there today, including a large print, the biggest print today by a country mile, nearly 200,000, 178,000 of the AUG 21s going up for prices around 78 cents. Paper buying them looks like in 2 massive blocks, 88,000 and 80,000 respectively. So we put it out to you folks. Are you feeling this trade? Are you a buyer or a seller right now? Flash poll just went live earlier during the show. If you're following us at Options, you can play along. If you're listening on the podcast, probably going to be too late. And right now, 57.1% of you are saying you'd rather sell those than buy them. 42.9% saying you're a buyer. We shall see how that works out. Thursday, 771,000 contracts on the tape. The big dog on Thursday, 52,000 of the AUG 12 puts, followed by number 2, 36,000 of the AUG 25s. In fact, they're coming up against it already. We're having a fun show. A lot of stuff to talk about this week. So I'm going to kind of breeze through this volume a little bit because I want to get to some of the vol ETPs, Russell's secret weekend trade, all sorts of fun. Wednesday, 1.32 million contracts on the tape. The big dog there, 85,000 of the SEP 16 puts, 1-6, followed by 84,000 of the SEP 20s and 84,000 of the SEP 16. So I think that was a bit of a put versus vertical out there. Tuesday, 1.56 million. So far, Tuesday is the winner chicken dinner, but we shall see. Today, not done. Pretty aggressive volume, 1.56 million. The big dog on Tuesday, 125,000 of the AUG 17s, followed by number 2, 112,000 of the SEP 25s, and number 3, 101,000 of the SEP 45s. In the past, they've liked that SEP vertical. They could have been taking some of that off there, maybe adding to it. And then Monday, again, 1 million, 1.09 million. The big dog on Monday, 122,000 of the SEP 25s, followed by 101,000 again of the SEP 45. So this vertical has been a pretty popular one so far out here. Let's keep rolling. You know what has been popular, maybe a little bit less so these days, listeners, is the Rock Lobster and Mr. Once and Future Dr. Bix's beloved UVIX. Coming off, it was at a 45.20 when we kicked off the show. That puts it down 6.4 points. It is down to, it's below 45 now, 44.8. So that's down 6.8 points on the week. SVIX taking a drubbing. Go figure. Vol actually pops. XVIX does what it's supposed to. It goes down. Seeing some paper out there today. 22,000 contracts on the tape. So they are slinging some SVIX today. Let's see, what are they up to out there today? 1,750 of the AUG 53s going up, opening 5 threes. Wow. And then 1,300 of the 46 half puts expiring on the 2nd. And then 1,300 of the 46 puts also expiring on the 2nd. So maybe a bit of a vertical. It's not a roll because it's opening on all 3 of those that I just talked about. So intriguing stuff out there. The ADV also skyrocketing up to 7,100, up 1,400 contracts. Mr. Rock Lobster, anything catching your eye in the world of inverse vol this week, sir?
Well, all I would say is with inverse vol, it's fun. It's fun to start trading it now. So I don't care about it until actually VIX goes up, and then I start to care about it. So I think I know, and I had some crazy when VIX was 12. I had SVIX top price by August expiration at 54. So one of the cool things about the inverse vol products is that when you have like a low VIX but a high like future premium, like the inverse vol products, they don't forget where the futures were. So if they get back down to those levels and then start to decay and crash into the cash price, you'll get those old highs. So I don't get giddy at them when VIX is really low. I've learned my lesson. Even when you hedge them, it's like, then why bother buying the short vol part? But now, yeah, if we actually get, with this whole vol situation reverses, which it easily could because it has every single time in history, SVIX becomes interesting as a trade again. Now, my question is, are you not seeing folks pile into the calls? So what I would say right now is what's interesting, you're seeing a lot of puts trading, maybe some put sellers, but you're not seeing a lot of upside call buyers yet. And SVIX has been around now for a little bit. You're not seeing that crazy amount of call buying. So I'm looking at volume is mostly on the put side in the first, at least till August 16th. So I would say is now it becomes interesting because these are great bounce products. And that's when I generally, like trading them for a short period of time, even, buy riding them or something like that. So I'd say, yeah, they're starting to look interesting at this level.
Well, let's get out to another person. I think he is recovered from his Alvin and the Chipmunks phase, Mr. Dr. VIX. I know he's a big believer in all things UVIX, probably selling some puts, so he's probably riding some UVIX. And I know you also told our chat you've already executed your weekend trade, buying 1,000 UVIX at 618. So you are in the rarefied position right now, Mr. Dr. VIX and VSTOXX, of owning both SVIX and UVIX, sir. You're on both sides of the spectrum. Congratulations.
Mr. Valentine is playing both sides of the market, and I assume you can hear me here.
I can hear you a little bit. You sound like you're still Alvin and the Chipmunk in a tin can, though. All right, we're going to try to get Russell back, but yes, he does. He does indeed. He does indeed own both SVIX and UVIX right now, listeners. He bought his SVIX. He just told our chat a little while ago. He bought it at 618, which is interesting because I thought you did this trade pretty much right before the closing bell, so you had no intraday risk. So now you're riding a little bit of UVIX, which is interesting. We're all riding a whole bunch of craziness right on into the crystal ball. So here we go.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And let me just really quickly, before we get into the crystal ball prognostications, just pay off a few others of our, as I try to get the once future and now present Dr. VSTOXX back here on the show. UVIX 610 up 1.5 points when we kicked off the show, putting up 21,000 contracts today. ADV 16,000, so looking pretty good there. And then we have, let's see, UVXY 2520 up nearly 5 points right now, 4.7 on the week, doing 71,000 contracts today. The ADV is 48,000, so another one looking pretty robust out there. I want to let me add the once future and present Dr. VSTOXX. What is it doing? The magic of technology here, listeners. All right, and then we've got VXX 11.5 up 1.5 points, 63,000 contracts on the tape today against an ADV of 49,000. So everything is popping from a volume perspective on the vol front, including the vol products themselves. Let's get out to it now, listeners, and see what we've got cooking. VIX, like we said, ticked over a 17 handle. Given some of the, I cursed it. Second I said that, it retreated. It is at a 1681 right now out there in VIX land, listeners. And then we had VSTOXX, like I mentioned, closing at a 1652. So right now, about a 0.3 point difference out there. Let's see. I was at 1178. Meatball's at a 1331. Russell was at a 12.5 on the show last week. No joy for any of us. VSTOXX, I was at 1265. Meatball was actually, oh my God, Meatball. Another bullseye for him. His palindromic nonsense coming in effective on VSTOXX. He was at a 1661. VSTOXX closing at he was feeling it on VSTOXX for whatever reason. So 2 weeks in a row for the Meatball. Wow, okay. And then Russell's at a 12.5 and VSTOXX at 1365. All right, let's go around the horn. Let's start with the Rock Lobster. You could show our guest here how it's done, Mr. Rock Lobster. But since your compatriot won last week, I'll let you have the pride of place of going first. What are you feeling for VIX and or VSTOXX next week, sir?
Wow. I just can't believe VIX is going to stay up. I think some of the earnings come out and then some of the heat comes out, and this Biden thing should be solved by then. I guess we'll be back to I'm going to say like a 1485.
1485 VIX. And what do you got for VSTOXX?
Let me pull up my Thinkorswim here. Where'd my, hold on. I'm almost there. There we go. Whoopsie. I'm going to go to, I'm 16 and a half. I'm going to, how about, I'll go a little lower, like 1420.
Bit of a discount there in VSTOXX. All right, Stefan, hopefully they prepared you. I let the Rock Lobster go first to kind of pave the way for you. What are you feeling this time next week on the show? I'll let you choose. You can pick one, you can pick the other, you can pick both. What are you feeling for VIX and or VSTOXX, sir?
VSTOXX 16.9. Plus, I'm in comfortable position since I won't be on next week. Right? I won't be measured.
Yes, that's true.
No risk, no fun.
We will track you down. We will dial you next week on the show and say, "Oh, Stefan, you were right or you were wrong." So be prepared. This time a week from now, you will have.
We don't have a problem shaming you later in absentia.
We'll shame you, or we'll perhaps celebrate you. I don't know. It's one way or the other, Stefan.
No problem.
So maybe if you're not close, just don't be near your phone this time a week from now. I
have a thick skin.
All right. I think third time, or maybe the eighth time, is the charm. The once future and present Mr. Alvin and the Chipmunks. Are you there, sir?
Switch to a speakerphone.
All right. I can hear you.
Is that better?
Yeah, it's better.
Okay, thank goodness. I have no clue. This is the Yeti microphone that you told me to buy that's not working. So I was actually thinking 15 for both of them. Does that leave enough space for the other guys?
Sure. 15 for both. Look at you. No premium at all out there, VIX versus VSTOXX. All right, so Andrew gets 0.15. You're squeezing him a little bit, but it's okay. We don't mind squeezing the rock lobster. All right, and then I shall go last here, listeners. And yeah, we said VIX. We had a 17 handle today. Giving some of that up right now. Again, we have so much literal weekend risk right now. It is possible to tell where we're going to be even on Monday, let alone Friday. But that's the game we play here, listeners. I'm going to say things are still a little frothy this time next week. I'm going to say 1645 for VIX, and then VSTOXX. I don't know if it'll keep as much juice. I'm going to say 1675 for VSTOXX. All right, listeners, we ran a little long, but we're having fun. So much to talk about on the vol space this week. A lot to unpack. What are your thoughts on the literal weekend risk? Are you going to do Russell's quote-unquote secret UVIX trade, a little bit of quote-unquote free weekend risk protection? Are you doing something else? Are you buying those VIX calls? Right now, actually, 70% of our audience is selling those VIX calls. You want nothing to do with those AUG calls, AUG 21s for for 78 cents. No, thank you. All right, but Stefan, I appreciate you joining us, taking a step out of your comfort zone on the show this week. Before we go, if folks want to check out anything you're working on, where should they go? What should they do?
Go to A7- platform, the deutschebörse.com, and check out all the great data we have. There's always more data. Shitloads of data. And I mean this as a technical term.
Stefan getting us the explicit tag on the way out. He's not playing.
You gotta have him back, Mark.
Check out their data over there, Deutsche Borse. Literal S-loads of data over. I think that's their slogan. We have S ton of data over here at Deutsche Borse.
I think that's the new tagline for their data shop.
I'm going to suggest
we have S-loads of data.
I'm going to suggest that. Stefan, you just made my week. Thank you very much for that, sir.
That was
appreciate
excellent.
that. All right, Mr. Rock Lobster, you got S-loads of stuff going on in the land. I'm going to see you in person next week. How crazy is that?
Are we going to do the show live Monday?
I'm going to do the show live Monday, yes.
Sweet. All right, so Monday next week. Oh, you can buy the live stream if you go to Option Pit website. You can buy the live conference stream, probably 15, 20 trade ideas coming out of it, Unreal speakers. Like, all my students end up paying for the trip just on the trade ideas. So if you want to just see, if you've never done an Option Pit thing and you want to see how we trade, how all of our instructors will be there. Mark will be there with Tucson, everything on Monday, see it live. Really, if you want to learn how to trade options, hard to beat it. And obviously, we're not selling live tickets anymore, but you can catch the conference stream. So go to optionpit.com and buy it however you buy it. I don't know, or 888-TRADE-01, and Ted will hook you up. And if you heard the show, you get 10% off. Say you heard it from the show, you get 10% off.
So they can get the stream directly from the website? That's what we got cooking
this week. I'll be in Chicago to see, I will see the all and great powerful Oz of the Option Insider Radio Network.
Yes, you shall. So a good week for you. I'm looking here on the website so they can get the stream on the website. Okay, so we'll make sure we tell the folks out there to go to the land of the pit, optionpit.com. And Mr. Rhoads, if you can hear me, sir, where should folks go if they want some more of your good goodies, sir?
VIX, that modified VIX future thing, Mark Sebastian, who throws around compliments like manhole covers, he actually said it was one of the best things that anybody's ever done in VIX. And of course, I didn't keep it up for 4 years. So I'll talk a bit about that when I am speaking on Wednesday afternoon at the Option Pit Conference at what used to be the post office at which is now SIBO. But that's how to find me. And any of you that are going to be there in person, I'll be there Tuesday and Wednesday next week.
There you go. Check us all out live in person next week, listeners, at the Option Pit Shindig. If you're going to be in Chi-Town, love to see you. If not, of course, you can stream it, see how the sausage is made, get a little live glimpse of the option block. That should always be fun. And you know where to go to learn more about all things VSTOXX. Check out the data, everything else. Eurex.com, EUREX.com, the place to go. You can also go to the STOXX, STOXX.com is the place to go there as well, to go straight into the VSTOXX data. That's going to do it for us on Volatility Views this week. Going to do it for us on the network. If you're on the on-demand side, that will conclude your broadcast week with us. If you're hanging out in the pro, just hang out. We'll be back in a little bit, talking all things unusual activity on options oddities. We got a wild weekend maybe in store for us out there, listeners. So we mean it when we say it. Stay safe out there. And we'll see you back here, hopefully live on Monday for a little bit of Option Block Live, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.